Welcome traders to this week's analysis of dollar index. My name is Vic. Thanks for joining me in this analysis. I've received a lot of queries around dollar index is why do we look at dollar index? And I mentioned this in nearly all the analysis that I perform weekly basis. But let me clarify this once more. So dollar index DXY is a kind of like in a bucket. It's an index of all the major currency pairs that you have, like Euro USD, GBP USD, USD CAD, any of those currency pairs which have USD in them. They are all those major currency pairs. They are part of dollar index. You can Google it and you'll be able to find more information about this, how much percentage of each currency pair is involved in DXY. Now, there is another variation to DXY, which is US dollar, and that is owned by FXCM. And that has equal weightage to all currency pairs like Euro USD, GBP USD. But DXY has more weightage towards Euro USD, GBP USD, and AUD USD. So now why do we analyze DXY is because it shows the collective strength of the dollar against all the major currency pairs. If let's say euro is getting weakened, that means it is obviously getting dollar is getting more of strength in relation to with respect to euro. So we'll see that DXY will start to move higher. That means we'll be able to say that dollar is getting more powerful. And if we repeat the process but in the opposite direction, if we say okay, let's analyze DXY or US dollar, and then based on that we can actually go back, look at those currency pairs, the constituent currency pairs, and say okay, if the dollar is supposed to find a support resistance or some kind of movement around here, then that means other currency pairs are expected to react as well. So what we do here is we analyze the dollar using the DXY, and then we try to use that analysis on other currency pairs, other major currency pairs that we have. If DXY is falling, then Euro USD is going to go higher, and if DXY is going higher, that means Euro USD is supposed to go down. Did I get it right? Okay, once more. If DXY is going higher, then means Euro is going to go down. If DXY is going down, then Euro USD is going to go up because they are inversely correlated. Okay, so what we can see on 12-month chart is that market is reaching this particular moving average, which is right there at near about 91 or so, and this can act as a kind of temporary support for dollar to actually move higher. And we have been actually watching the similar kind of area around 91, 92 area, where the market can actually move higher a little bit. And so far what we see on this structure is that even if the market starts to move down, there are several barriers to it. One is this structure around here, this support around here, then we have another one here 90, and then we have at around 89 as well. So there are several factors. So looking at few years time, market may actually come down to actually retest some of those, but ultimately it will find support at some point in time around these area. Okay, if I go to the monthly time frame, we know that we have been looking into monthly time frame for a quite a long time. Let me quickly revise this. So we have this W pattern right there. This is the 38.2 Fibonacci level. So the market came to 38.2, fell down, then it tried and it crossed 50%, and then it went to 61.8 Fibonacci level, which is right there. It fell down, which was expected because that's a major Fibonacci level. It fell down, found its support in these moving average, started to move higher, tried once more, fell down, and now this is kind of a reaction which actually happened to 61.8. This is acting as a double top. However, there are few other structures, few other things which are lining up around here in this particular region. First of all, this is a consolidation, because market is not able to create any higher highs or lower lows. So it is not actually in kind of like any kind of momentum, any kind of trend at the moment. However, if we look from this point, we can see that market has been creating higher highs, and only around this point it went into consolidation. So overall the market is still bullish until it breaks through this midpoint. of 88. Once it has broken the midpoint of 88, then it is expected to come down to like near about 84. But it has a lot of stuff around here before it can actually break through this, because we have the previous structure where the market found its previous support as well. So it needs to go through this before we can say this can go to 84. For now, what we can see that market may find its support somewhere around there 91.94, 91.92, because we saw it on 12-month chart as well. This is where another moving average is, and we have the previous structure, and we have this moving average right here. There's another thing which is happening right now is this crossover which is happening, and this is turning out to be a bullish crossover. If the green one goes above then yellow one, that will be a crossover saying that market is probably turning into a bullish moment, bullish mode once again. But looking at just these candles right now, as I mentioned in my previous analysis, we have this M pattern which has been completed, and this M pattern basically means that market is expected to go higher. Now there is a little point where it can actually fall down to all the way to 9190 level, because this is where it will find a better support and better Fibonacci level. But ultimately it's gonna go, it will find its way all the way to like either 94.58 or even higher to 95.71. And if it finds bullish momentum enough, then it can actually start to go even higher than that, to approximately around this level of 98. So these are all the possibilities that we have been actually tracking for past few weeks. And if I bring in my original analysis, this is what we have. On in the last analysis that I presented, I mentioned that market could start to move to this particular trend line, which is a monthly bullish trend line, and market could do that. But it obviously fell from this level 93.95, which we identified. These are all the important levels that we have, and if you want to find out more about these levels, you can go and check out my previous analysis. You can find the link in the description, where I explain why we are monitoring these levels. So at the moment, it is still in the middle of nowhere. It can actually start to move higher if it finds enough bullish momentum. Otherwise, it is expected to go down to 91.95, which is a good level on 12-month chart, monthly chart, and weekly chart. All of those charts. So it can find a momentum right there. Okay, if I go to the 4-hour time frame, what we see that market created this M pattern, and which actually, I'm not sure whether it actually completed there. Let's check it out. Okay, that's going to complete around here at 92.81. So next week, it is possible for market to actually start moving downwards, like this, or it can actually move even further down, to go to this level. So we'll have to be careful with that. But at the moment, it is consolidating. So if you're a day trader and if you know how to trade WNM patterns, then this is going to be very good for you, because even if you're not trading DXY, you should find the similar kind of patterns on Euro USD. So if I go to the Euro USD, I'll be able to see the similar kind of structure, but in opposite direction. So this is the structure that we have, and there are several WNM patterns which are evolving right now. So there are very good opportunities evolving on USD pairs, but we must keep an eye on dollar index for like our analysis purposes, and to make sure that we are looking ahead in the market. We are preparing ourselves for the next event or next level which dollar can bring. So this is my analysis on dollar index. Hope you enjoyed this. Hope you found this useful. If you did, hit the like button, and in the comment section, let me know what you think about this analysis. What is your opinion? And do not forget to follow me here on this channel for future trading tips and trade setups. Thank you.